Good morning and welcome to today's webinar, Maryland ABLE, a savings tool to promote independence, financial stability, and quality of life for people with disabilities, presented by Maryland ABLE's Outreach and Communications Manager, Kelly Nelson. My name is Jeff Stauffer, Community Relations Director with Elville and Associates, and I'll be moderating today's event. So how this will work today, if you're new to our webinars, if you are, welcome. We're glad you're here. I know we have a number of new people attending today. And if you're returning to see us again, welcome back. So you as the attendee are currently in listen-only mode. However, if and when you have questions, and this presentation generates a lot of questions from our attendees, please note them in the questions panel on the right-hand portion of your screen, and we will pause throughout the presentation to address them. Your questions really help the presentation and add value. They help others learn. So please don't be shy in posing your questions at any time. You received the presentation from me by email yesterday to take notes on it if you wish. If for some reason you didn't receive the presentation from me yesterday, it is currently located in the section marked handouts on the panel on your screen to download at this time. For our advisors on the presentation today, welcome to you. You may receive 1.5 continuing education hours for attending today's presentation. And per my attendance records requirements, please email me your ID number. And for CFPs only, I also must have the last 4 digits of your social security number as soon as possible so I can submit your CE hours for approval. If you've attended before and already have this, there's no reason to resend it to me. Everyone will also receive a post-webinar feedback email right after the presentation, and we do ask that you take just a couple minutes to fill out this simple survey to offer us your feedback about the presentation. Elville and Associates, here at the firm, we work every day with clients and their families with the ideals of client education, collaboration, and compassion in mind. We're always available for free consultations to discuss your planning needs and want to be a resource to you in any way to help create a path forward for your planning needs. So please contact me at any time with any questions. So I have the pleasure, as always, of introducing today's presenter and longtime friend of Elville and Associates, Ms. Kelly Nelson. Kelly has worked in the field of disabilities for more than 30 years. She has served in many roles supporting people with disabilities and their families through advocacy, education, and connecting them to vital resources within their community. As a parent of a child with disabilities, Kelly is passionate about helping her daughter to become a confident self-advocate as she pursues her goals of working and living independently in the community. As the Outreach and Communications Manager for Maryland ABLE, she is delighted to have the opportunity to connect with many people with disabilities, their families, and the staff that support them as she travels throughout Maryland educating people about the benefits of having an ABLE account. Through her outreach endeavors, Kelly is excited to see how her work with Maryland ABLE is helping to promote personal choice, independence, and economic stability for people with disabilities. So welcome, Kelly. We're going to start off with a brief poll, as we always do with this presentation, to get everyone comfortable with participating. And so Kelly can tailor the presentation to you and get an idea of who has joined us today. So the poll we have here is, how familiar are you with Maryland's ABLE accounts? And I'm going to go ahead and launch that poll. So make the choice that best suits your situation right now. And the choices are, I have an ABLE account and I'm here to learn more. Second, I have heard of ABLE accounts and I'm here to learn more. Third, I want to set up an ABLE account and have questions. And lastly, I'm an advisor here to learn to better serve my clients. So take just a few seconds to make the best selection for your situation. We appreciate you participating. And we'll give it another few seconds here. Okay, so we have 21% saying, I have an ABLE account and I'm here to learn more. 50% say, I have heard of ABLE accounts and am here to learn more. 17% say, I want to set up an ABLE account and have questions. And another 10% say, I'm an advisor here to learn to better serve my clients. So Kelly, we have a pretty diverse group here today, and appreciate you being here, as well as everybody that's in attendance. And I'll go ahead and turn the presentation over to you.
Well, good morning, everyone, and thank you so much, Jeff, for that very wonderful introduction. And I thank you and everyone, the wonderful team at Elville, for giving me this opportunity to come back again and share information about ABLE accounts. If I sound like I'm excited to be here, I truly am excited to be here. As Jeff said in my introduction, in addition to working for the Maryland ABLE program, I also have some practical real-life experience with ABLE accounts, as I do have an 18-year-old daughter with multiple disabilities who has an ABLE account of her own. And I've had the pleasure for the last 3 years of serving as her authorized legal representative on the account. So it's really given me this great perspective, an opportunity to see how an ABLE account has really benefited our daughter in helping her to practice some personal choice, become more independent, gain some self-confidence, and learn some really good financial literacy skills, which is so important for all young folks. It's also given her father and I a way to begin that planning and saving and investment process for the future for her without having to worry about her jeopardizing any benefits that she has. So I'm excited because I've seen it and I hope to incorporate some of these examples throughout my presentation. My goal for this morning is to share with you a broad overview of the ABLE program, the ABLE legislation itself, the eligibility criteria and account management process. We're going to talk about some of the benefits of having an ABLE account, specifically some of the tax advantages, as well as features such as the savings and investment options and some other ones. So that's how we're going to go ahead. That's my plan for the day. We're going to get started because we do have so much to cover today. So let's start. For those of you who are just hearing about ABLE and kind of new, let's talk about what are ABLE accounts. Well, basically, ABLE accounts are a way for people with disabilities and their families to finally be able to save money without jeopardizing those federal benefits, things such as SSI, Medicaid, and waiver services. So we do know that people with disabilities who have been receiving SSI benefits, SSI cash benefits over the years have had such a challenge, and that these cash benefits are so important for helping them to maintain their quality of life and be able to live. And oftentimes with SSI comes the Medicaid, that's the insurance, and sometimes waivers as well. But the problem is they haven't been able to save beyond a $2,000 asset limit, which has been imposed by the Social Security Administration. So, how do we talk about planning for our future and living the life that we want, living where we want, doing what we need to do, taking care of ourselves, and not have the opportunity to be able to save any more than $2,000 to do it? So that's why one of the main reasons why ABLE programs, ABLE accounts were created. Thankfully, in 2014, President Obama signed into law the Stephen A. Beck Jr. Achieving a Better Life Experience. So that's where we get the acronym ABLE. And this legislation, it's federal legislation that gave states across the country the opportunity to open ABLE programs and make ABLE accounts available to people with disabilities. At that time, it did not federally mandate for states to open programs, and it didn't come with any funding attached to it. So you know what? It took some time. I mean, the legislation passed in 2014, but states had to figure out, hey, can we open one of these programs? Who's going to run it? Who's going to pay for it? So, if you're just hearing about Maryland ABLE, it's because we've only been around for 4 years now. We do know that currently there are 48 programs nationwide that have ABLE programs, and we are one of those programs. So a lot of the information that I'm going to share, particularly in the beginning of this session, is going to apply to ABLE programs nationwide. So if you're one of the advisors that's listening in today and you work with clients that are living in other states or will be moving to other states for retirement, just know that there are ABLE programs across the country, and I'll give you some resources about being able to access information for them as well. So as I said, we launched our program here in 2016. Actually, our law was signed in 2016 and we launched in 2017. And we are actually operated by Maryland 529. Some of you may be familiar with Maryland 529. We are sharing an executive director and a board of directors that oversees both Maryland ABLE and Maryland 529. We are actually next to them in the Internal Revenue Code. That's where our regulations are held that have all the guidelines for ABLE accounts. We're section 529A in the Internal Revenue Code. So I do point that out, not to bore you to death about the IRS code, but to let you know that that's where you'll find our regulations that guide things. And as we move through the presentation, you will see some tie-ins of things that tie back to changes that the IRS makes from time to time. So let's take a look at some of the main reasons why people are interested in opening ABLE accounts. The first one is being able to increase their saving limits before SSI cash benefits are impacted. I shared with you that there is this $2,000 asset limitation for people that are receiving SSI benefits. And for years, people were having to spend down money just so they wouldn't go beyond that resource limit and lose their benefits. So with an ABLE account, people are actually able to save up to $100,000 in an ABLE account without it impacting those SSI cash benefits. So what a difference that has made. I mean, worrying about not going over 2,000 and being able to have 100,000, that gives you a lot of opportunity to plan and prepare for those life goals that we want to have in place for people with disabilities or family members. The other thing it does is it not only protects those SSI cash benefits, but it's going to protect those other federal means tested benefits, things such as Medicaid and those waivers that are attached to it, things like the food, energy, and housing assistance that people are able to receive. And if anyone has ever been through the process of applying for any of these waiver services, you will know it is really challenging to get them, and you do not ever want to lose them because you don't want to have to get back on a waiting list for any of those things. Another big reason why people are drawn to ABLE accounts is that you don't pay any federal or state taxes on the earnings while the funds are in the ABLE account, and not when it is withdrawn, provided that those withdrawals are used for qualified disability expenses, which is basically anything that supports the beneficiary in his or her health, independence, or quality of life. So there's a lot of ways you can use the ABLE funds, and you do not have you don't pay taxes as long as they're qualified disability expenses, and we're going to talk much more about that in just a few slides. Here in Maryland, you have access to a Maryland state income tax deduction up to $2,500 per contributor per beneficiary. So if we have families where mom and dad are married and filing joint taxes, then they are able to take a $5,000 income deduction on their Maryland state taxes if they were to contribute that much money to the ABLE account. Another big draw is ABLE accounts offer online enrollment. It's pretty simple, it's easy. I know people have been through the ringer with having to just, have these very lengthy application processes where you wait a long time to see if you're accepted. With an ABLE account, you're going to know right away. It usually takes about 15 minutes to set up your account online if you are opening an account for someone under the age of 18, and just a little bit longer if you're opening it for an adult, and we'll talk about why that is in a minute. It's also easy online account management. If you're accustomed to online banking, you'll find that it's very similar with the dashboard and being able to manage everything right from there. And you're going to have easy access to your funds. You control those contributions as well as withdrawals. I'm going to cover two more things, and then we're going to stop and take some questions. Let's look at who is eligible to open an ABLE account. You have to meet two criteria. The first is that you had to have developed a disability prior to your 26th birthday. Okay, so we do realize, and we have realized, ABLE programs across the country, as soon as the ABLE accounts legislation was passed, we knew that this was going to leave out a large chunk of our population here in this country. You know, when you think about veterans, people with traumatic brain injury that could have been in an accident after the age of 26, people with Lou Gehrig's, MS. I mean, we've got a lot of things with later onset of the disability. So just want to let you guys know that, again, ABLE programs nationwide are collaborating and advocating for the passage of the ABLE Age Adjustment Act. And this is currently Senate Bill 331. So if you know someone that could benefit from an ABLE account but's not eligible, we encourage you to reach out to your representatives and ask them to please support that bill, because if that bill passes, we will see that this age limit is going to be raised to age 46, but currently it's age 26. So let me just clarify a couple of myths about this number 26. People hear it and they say, oh, okay, I have to wait until I'm 26 to open my ABLE account. Not so. You can have an ABLE account at any time. We have ABLE account holders that are a couple of months old, and we have people who open ABLE accounts in their 80s. You just had to have the onset of that disability prior to age 26. So the second criteria is that you have to have a disability that meets the Social Security Administration's definition of a disability. So when you're in the enrollment process, one of the very first questions that it's going to ask you is, are you currently receiving SSI or SSDI? And if the answer to that question is yes, you kind of get to skip ahead a little bit, because we already know that Social Security has examined your documentation and found you to have a qualifying disability. So some of you may be thinking, well, okay, great. You know, my family member's not receiving SSI or SSDI. I guess I don't get to have an ABLE account for them, right? Another myth there. And that's not true, because all you would need to do is have a disability certification form signed by a licensed physician. You know, this is available because we do realize that oftentimes we will see kids with disabilities that definitely have a qualifying disability, but are not currently receiving SSI benefits, because if they were to apply as a child, Social Security examines their entire family's income, and that often disqualifies them because of the income. But once that person turns 18, they are found eligible because they have a qualifying disability, and they're going to be looking at just that one person's income. And it's either much, much lower, or sometimes it's no income at all. So that's why, you know, we have to have a way for you guys to be able to show your eligibility, and that is using that physician's form that's available on our website. All the forms that I talk about today are going to be available at our website at www.marylandable.org. And at the very bottom of the website, you'll see a section, a resource section. Click on the button that says Forms. And Forms is where you're going to find the physician's form that you can just print off and take to the physician the next time you go. You don't have to have that form with you or signed when you open the ABLE account. You just want to make sure that you go ahead and do get it and maintain a copy of it in the event of an audit. One last thing, and then we're going to pause for some questions. I need to point out that the ABLE account is always owned and operated by the person with the disability. They are both the owner of the account as well as the beneficiary. This can be a little different from other types of accounts. For example, a 529 college savings plan. You may be the owner of that account, but your family member may be the beneficiary on the account. But with ABLE, the person with the disability is always the owner and beneficiary, and is able to manage the account, or assumed to be competent to manage the ABLE account, unless two reasons. Number one, it's a child that you have an ABLE account for. You have to have someone serving as their authorized legal representative, usually a family member, because these are financial accounts and you cannot have a minor managing their own account. Once they turn 18, if they're able to manage their own ABLE account, that's fantastic. They can do that. We do realize that many folks with ABLE accounts do manage their account, but there's certainly a large population of them that need assistance for whatever reason. And if that's the case, you're able to appoint someone to serve as the authorized legal representative to manage the ABLE account. And this is done by providing consent in one of a couple ways. You may have a power of attorney over property. You may have guardianship of your adult child. So if you have either one of these two documents in place, you can just go ahead and upload them at the time of the enrollment, and you would be able to serve as the ALR. For some of you who are like, gosh, Kelly, I really don't know, like what I'm going to need, right now. My son is, 17. I don't know what's going to happen when he gets a little bit older. That's okay. You have plenty of time to worry about that. You'll figure things out as you go along. You certainly have at your disposal, wonderful resources like we have here at Elville. People can help you with that decision about guardianship versus power of attorney and all that good stuff. So in the meantime, what you can do is go to that website, the forms section again, and download a copy of what we call limited power of attorney over the ABLE account only. So this you don't have to take to an attorney. It's already been developed by the Assistant Attorney General for our agency, and you just print it off. You're going to take it to take the form to your bank, probably is a good place to take it, and you're going to sign it. The ABLE account owner and the ALR are going to sign it in the presence of a notary and two witnesses, and that's it. Just going to upload that document. So this is going to help you be able to serve as an ALR for the ABLE account only. It's not going to help you in a situation if your adult child is in a medical situation and you have to, you need to show that you have authority in there. It won't help you there. It's not even going to help you with any other type of account, ABLE account only. So this is a good place to pause, Jeff. I'm going to stop here and take a couple questions.
Thanks, Kelly. We do have a question here, a couple questions. Let's see here. First question, can you clarify that you said that two parents can each contribute to an account for a single beneficiary for a deduction of $5,000 per year?
That is correct. So it's $2,500 per person. So each parent contributing can contribute that amount. So together, if they're filing joint, it's a $5,000 income deduction.
Okay. Next question, are there some cons of owning an ABLE account?
I would say that some of the cons would be, and we'll see this in just probably the next slide or two, is that there is a standard annual contribution limit associated with deposits to an ABLE account, and that is $16,000. So for folks that are trying to use the ABLE account as their sole way of planning, financial planning for the future, this is going to be a challenge, because think about parents that want to be able to leave their assets or life insurance policies to an adult child with a disability. I'll be willing to bet you that our assets and our estate is going to be more than $16,000. So there would be no way of, gifting that or being able to give that inheritance to an ABLE account. This is where we're going to see that need for multiple planning tools. And that would be specifically a special needs trust, because there's only two ways that you can have financial assets. and have those assets protected from losing benefits. And the two ways are ABLE accounts and special needs trusts. So I would say that one of the drawbacks is definitely that being limited to just $16,000 per year.
Okay. Next question. Can the person who has the ABLE account have the account converted to another type of account or removed outright?
I'm not sure I understand the question, but once the funds are in an ABLE account, I think I understand. I'm going to try to answer it the best I can. You can clarify if I'm wrong. But once you have an ABLE account, you can only withdraw the money if it's going to be used to pay for qualified disability expenses. So if you say, you know, I had an ABLE account, but I don't want an ABLE account anymore. I want to get a 401k with, I don't know, whoever, T. Rowe Price, want to make that up. I don't care about the asset limit. I want to put the money in there. That would be considered a non-qualified disability expense withdrawal because there's no way to prove how that money is being spent. So that you would be paying taxes on the earnings when you close the account, right? But you could take the money out if you were willing to pay the taxes on your earnings.
Okay. Next question. My daughter is the manager of the account. However, she is showing that she is not responsible to handle the funds. She likes to shop. She is 28 and has SSDI. So no question there, but any general comments about that?
You know, that is a challenge for parents because, you know, we obviously want our adult children to make good choices and manage their money wisely so that they have enough to live on in the future. But because they are the owner of the account, you cannot manage the account without that person's consent. So if your daughter was willing to have you help manage the account and serve as ALR, then maybe you could, use that as an opportunity to teach some budgeting skills or help manage the money. But there is no legal recourse for, you can't step in and say, you're not managing the money well, I'm taking it away, because it is actually her account.
Okay. We'll do a couple more here. Can the $5,000 be deducted from one parent account, although parents are filing jointly?
I believe that you can. You want to double check that with your tax advisor, but if you're filing joint, I don't think it matters as to whose checking account it comes out of, as long as it's, it's going to be showing up on a joint tax return, is what I believe. But you just want to check with your tax advisor about that, or your preparer.
Okay. Can you move money from a 529 to an ABLE account to eliminate the $16,000 limit?
You can roll over money from a 529 college savings account, but it is still subject to that $16,000 a year annual limit. So if you had $20,000 in a 529 college savings, and you've determined that maybe your child is not going to be pursuing, typical college experience, you could roll over $16,000 this year and then roll over the remaining $4,000 next year.
Okay. All right, let's move forward at this time.
Great.
Thank you.
So we see that we're going to talk a little bit about some contributions here. When we talk about that initial contribution to the ABLE account, it has to be a minimum of $25 to open the account and get it funded. That is not a fee, that is a deposit of the person's money. From that point on, you decide, as the ALR or the account holder decides, when they want to put the next contribution in, and how frequently and how much, as long as those subsequent contributions are a minimum of $10. You can set up monthly contributions if you want. You can fund your account one time a year if you want. It's completely up to you, however it works best for your family. There's that $16,000 annual contribution limit that we talked about. This is one of those areas where we see a tie-in to those IRS regulations, right? Because this is actually established by the federal gift tax exclusion law, which says that a person can give a gift of up to $16,000 without having to pay taxes on it. When that gift tax exclusion amount changes, when the IRS moves that to a different amount, that's going to be impacting the ABLE standard annual contribution limit. So when we launched our program, it was $14,000. 2 years went by, they raised it to $15,000. Back in January, they raised it again to $16,000. So fortunately, it's always going and that is always moving up, so that gives people more opportunity to save. Let me share with you a little bit about the exception to the rule. If you have a person who has an ABLE account and they are employed, and they're not contributing to a retirement account with their employer, or their employer is not contributing to one on their behalf, they are actually eligible to contribute above and beyond that $16,000. So this is called able to work contributions. And I'm going to, you have your slide deck, so you've got the description and everything here. But just to know that, you are eligible, or the person is eligible to make these contributions as long as they're not currently contributing to a retirement account. So as you can see, they can contribute up to an additional $12,880. It has to be equal, it can't exceed the beneficiary's gross income for the current year. But that is definitely an opportunity to be able to save additional money. Here in Maryland, we have 4,568 Maryland ABLE account holders. And out of those people, 422 account holders are employed and are taking advantage of the able to work contributions. And over the last 4 years, collectively have saved over $1.8 million of their own money. To me, that blows my mind, because we're talking about a group of people that were one time told, don't work, you'll lose your benefits, you can't work, you can't save your money. So here we've got people that with disabilities that are working in the community, they're earning their own money and they're saving it, and they're doing a great job. So I think that's pretty amazing. So the amount that I want you guys to keep in mind is this $100,000 ABLE account balance, before which those SSI cash benefits may be suspended. So remember, money outside of an ABLE account or a special needs trust, you can have only $2,000 in resources. But within the ABLE account, you are going to be able to have up to $100,000. Once that balance goes beyond that amount, what's going to happen is you could either spend a little money down and go beyond that, go below the $100,000, okay? Or you could continue to let it grow. But what will happen is that those SSI cash benefits will go into a state of suspension. Please note that I'm saying that they will be suspended. It's different from over-resourcing yourself outside of an ABLE account and not doing anything about it, because eventually Social Security will disenroll you for having more than $2,000, right? But within an ABLE account, you're going to be suspended on those cash benefits, but the Medicaid and any waivers are going to remain in place. And at any point you were to spend down some of that money below the $100,000 balance, Social Security would be able to automatically reactivate those SSI monthly cash benefits, because you were suspended and not disenrolled. So that's really important to know. The other number that I know this would take quite a while to get to $500,000, especially since you could only put, $16,000 a year plus, if you were able to work $12,880. But still, once the account balance reaches $500,000, we are no longer able to accept contributions to that ABLE account until that balance were to fall below that amount. So any questions about any of these contribution amounts or limits?
Let me check here, Kelly.
And while Jeff is checking, I'm just going to remind you, when we look at that $16,000 limit, you are probably aware, but if you're not aware, I just want to let you know that with a special needs trust, there is no limit on the amount of money you can put into a trust. So you don't have to worry about staying within 16,000 or 100,000 or any amount for that matter. It's whatever amount you want to fund it with. So that's a big difference.
Okay, so a few questions related to this. Let's see, they're coming in kind of fast and furious. Let me get to the top here. Does the $100,000 apply to SSI benefits they may get from a parent's death versus their disability benefits?
You would want to check with your Social Security benefits coordinator, but any money that's in an ABLE account cannot be counted by the Social Security Administration against the person. So that should be, you know, from whatever source, but again, I'm not familiar with, you know, how much, you know, with this specific case and how much they're receiving from a parent and from themselves. But as long as the money is within the ABLE account and not exceeding that $100,000 balance, it cannot be counted against them as an asset from wherever that money's coming from. SSI, personal gift contributions, parent benefits, it's protected.
Okay. So is the able to work contribution on top of the standard annual contribution limit?
Yes, that's correct. So okay. You can put anybody can put $16,000 into their ABLE account, but just the ABLE account owner that's eligible for able to work can contribute above that, and that can be up to $12,880.
Okay. So the able to work, how does that impact the beneficiary's retirement contributions?
So if they're currently making contributions to their retirement account, they wouldn't be eligible for able to work, because the IRS says, hey guys, here's how it's going to be. You're going to get one advantage of tax. You're going to get one chance at tax advantage savings. Pick whichever works best for you. Maybe it's your 401k or your retirement account with your employer. Maybe it's a better deal because they're making there's a match contribution or something. Cool, go with that. Or able to work contributions, because again, these are tax advantaged. So you could still have an ABLE account and make contributions. You just wouldn't be eligible to go above and beyond that $16,000.
Okay. Next question, why would someone do an ABLE account versus a special needs trust?
Great question. So a lot of families that are starting out in this process of planning and preparing for their child's future, we know it is like an elephant in the room. You gotta, sometimes the only way to eat it is one bite at a time, and you gotta get started somewhere. So special needs trusts are finely nuanced, amazing planning tools that will, once you get it done, you're going to feel fantastic because you've got everything taken care of and you've been through this big planning process. But as Jeff and the folks at Elville can tell you, you're not going to have one open in a week. It doesn't work like that. There's a lot of planning and thinking and considering. So there's the time factor. There's also the fact that ABLE accounts, you can set that up today in 15 minutes if you wanted to. So there's one difference. The other difference is people that want to have these special needs trust and incorporated it sometimes into an estate planning process, the cost is much greater than an ABLE account. So ABLE accounts can be opened for, you can have an ABLE account for $35 a year, whereas the process for getting the special needs trust implemented and created is obviously going to be much more than that.
Okay, let's see if we can do one more here. We have some repeats of some questions. Okay, one more here. Can you contribute to an ABLE and a 529 with the same beneficiary? And if so, what are the limits?
Yes, you can contribute to both a 529 and an ABLE account. So the limit is still going to be $16,000 for ABLE. for the ABLE account. That doesn't matter whether you are contributing to the 529 as well. And I have actually up here on the slide right now the ABLE Financial Planning Act that tells you that you are able to roll over these savings from a 529, provided that the benefit, you have an ABLE account, the beneficiary is your child with a disability, they have an ABLE account, you can roll that amount over within that $16,000 per year.
Okay, do you want to do one more?
Sure.
Okay. So my daughter is only 6 with autism and global developmental delays. How will I know if she will be considered disabled when she is older? Do we need to wait and see how she does with time?
That's a personal choice, but let's just say, you open the ABLE account now, and 5 years from now, that there's just no indication whatsoever that she has any type of delay or any type of disability, and you would be no longer eligible for the ABLE account, right? So what you could do is you could have been spending the money that was in your ABLE account while she was considered eligible, but now you may have a balance in the ABLE account. You could close the ABLE account, but again, you would be paying taxes on the interest that you earned while the money was in the account, right? And there would be a 10% tax penalty for withdrawing the money and just taking it somewhere else, as opposed to using it on a qualified disability expense. So the advantage is you can go ahead and start using the ABLE account now. Remember, we talked about that income tax benefit here in Maryland. I kind of look at it like this. There are things that I was paying for my daughter. My husband and I were paying for things because she's our child. We're providing for her. She's a child. We're paying for her medical expenses, her braces, all kinds of things. We're paying for them anyway. We may as well contribute the money to the ABLE account and then use the funds in the ABLE account to pay for those expenses. And we're getting an income deduction on our taxes. So that would be one of the main reasons I would think that people may consider doing that, even if their child may not be eligible in the future.
Okay, very good. Let's go ahead and move forward for now. Thanks.
Let's take a look at some of the savings versus investment options. Because of the interest of time, and this is one of these situations I could spend a half an hour just talking about these, but what I want you to take away from this is that you have choices. You have choices with your ABLE account as to how you want to either save or invest. It's totally up to you, and you can change your choice if you want. So let me start by saying that we have a cash savings option, which is an FDIC insured banking product, okay? So some folks that have an ABLE account, they want to use it very transactionary. I'm gonna put my excess money from SSI into my ABLE account so I don't have to worry about being over-resourced. But guess what? I'm also gonna use that money throughout the month. So I wanna keep it in the cash savings option. I wanna know that when I need my money for withdrawal, it is gonna be there. And they like that, and that's great, works for them. Other folks, sometimes when you talk about families that are opening an ABLE account for a very young person, a child, sometimes someone may be born with a disability and they know that it's going to be with that disability will be present throughout their life. They want to set up an investment. So they choose one of our 4 investment options. And they are all mutual funds that are managed by Vanguard. We currently have 4 of them. We'll go ahead and start with the conservative option, which is 80% of the portfolio is going to be in bonds with 20% in the market. Moderate is going to be a 50-50 split between stocks and bonds. The aggressive option is going to be 84% in stocks with just 16% in bonds. So you can see that there's different options for the risk tolerance of each person, and everyone's case is different. How long do you plan on leaving the money in there? Do you want to access it within the next couple years? Are you willing to put it in there and let it ride for the next 10 or more years? We'll help you make that decision as to what choice you want. Definitely consult a financial advisor. They can give you advice on which one of these portfolios would work best. Our 4th and newest option is the fixed income option. And we added this because currently with our cash option, you know, it's FDIC insured, so you've got the security of knowing the money's going to be there, but it's receiving the federal interest rate, which right now is really low. It's been really low for a couple of years. So people with the using the cash savings option, they weren't earning that much on their money that was in their ABLE account. So we added a fourth portfolio, which is the fixed income. It's 100% in bonds. So you have you know, much lower risk associated with that than being in portfolio with stocks in it, but it, you know, you don't have the potential for the gains either, but it does give you an opportunity to hopefully earn more than what the federal interest rate is. So there are some choices for you. Just know this, whatever you choose when you open the ABLE account, you're not married to it. You can change it. You can change your investment strategy up to 2 times a year. And actually, every single time you make a contribution to your ABLE account, you have a choice of where you want to put the money. So if you're going to be contributing, say, you know, $200 to an ABLE account, you could put $100 in cash option, and you could put maybe $100 in moderate. And then next couple of months later, you want to put money in your ABLE account, and you go, hey, you know what? I think I want to try that fixed income. That's looking kind of good to me right now. This contribution is going to go all into that fixed income account. So you have an opportunity to do that. So I cannot spend too much time talking about all the differences, but our program disclosure book available on our website will have all the details of the funds, the names of the funds. Vanguard manages them, but they'll tell you everything that's part of that and any asset-based fees that would be associated, and they're different depending upon which portfolio option you choose. So please, if you're interested in investments, read that program disclosure book and you'll see all the details for that. I'm going to go ahead and just kind of to move through things a little quicker and have time for questions. Who can make a contribution to an ABLE account? Good news is anybody can contribute to an ABLE account. It could be the owner, him or herself, family members, friends. It could come from earned income from a job. Unemployment funds can be put in there. Economic stimulus payments. This was a huge lifesaver for so many people during the when we were really in the shelter-in-place portion of that pandemic time. People were, you know, not able to spend some of the SSI funds because they couldn't go anywhere. Then the economic stimulus payments come in. Talk about being in danger of being over-resourced quickly in a situation like that. So having the ABLE account as an option to put that money was great. We talked about rollovers from 529. You know, you can contribute small inheritances. Anything under $16,000 can go into an ABLE account, and small settlements, again, under $16,000. But for anything larger, it's that special needs trust. That's where you're going to need to have that as another tool for larger inheritances and settlements. Let's look at how we're going to be able to use the money for ABLE accounts. And this does generate a lot of questions. So what I'm going to do is I am going to just give you a brief overview. Basically, when you're the ALR, you're managing the account, you want to ask yourself this question before you withdraw money. Does this withdrawal, am I going to use this for a purchase that is going to support the ABLE account beneficiary in his or her health, independence, or quality of life? If the answer to that question is yes, it is a qualified disability expense. If you were to go to Section 529 of the Internal Revenue Code and look up qualified disability expenses, you're not going to see a list of specific items, but what you will see is that they do mention these categories to give you an idea. These are not intended to be an all-inclusive list. Health, prevention, and wellness, that's your, you know, prescriptions, doctor co-pays, but wellness can be a gym membership. It could be therapeutic horseback riding. You have to think, how does this support the person in their wellness, right? Housing, you can pay rent and mortgage. Education, it could be college. It could be your housing at a college, but it could also be courses that are non-credit courses at a community college. It could be tutoring. Transportation can be buses, Ubers, trains, planes. It can also be to purchase, if an ABLE account is able to drive and they need a vehicle, they can purchase a car from their ABLE account. They can maintain that vehicle with funds from the ABLE account. Tires, oil, because again, that is supporting the ABLE account owner in his or her independence in the community. You have to, if you got a job, you got to get there, right? You have to have reliable transportation, which means you can't have 4 flat tires. Basic living expenses are food, clothing, utilities. Assistive technology can be computers and screen readers, but it can also be your cell phone. You see here that legal fees, if you want to have a special needs, if the person wants to have a special needs trust set up for perhaps maybe a settlement they received, you could use ABLE funds to pay for that. Financial management, so if you want to consult a tax advisor, all of these types of things are allowable. It would probably be easier for me to tell you the things that I have heard that the IRS said a big hard no on. That is no buying gifts for anybody else with your ABLE funds, because again, this account is intended, it's a tax advantage savings account that is intended for use of the funds for just the beneficiary. And the second thing the IRS has said no to is gambling. You're not going to be able to take ABLE funds and gamble money. So that's what I know that the IRS has said no on. Other than that, you have to use your discretion in managing that account. Does it support them in health, independence, or quality of life? Maintain your receipts as documentation. In the event of an audit, and I don't mean by Maryland ABLE, but if you are ever audited or the ABLE account owner is ever audited, not because they have an ABLE account, but because they just got lucky and got pulled for an audit, and the IRS sees that they have an ABLE account, they're going to want to know 2 things. Does the person qualify? Oh, okay, they're receiving SSI or SSDI, or oh, they have this disability certification form signed. Check, that's cool. Next, how are they spending the money in this ABLE account? Are they using it for the beneficiary to benefit that person and support and maintain them in their health, independence, or quality of life? So you want to maintain those receipts. Let's stop here because I know that usually QDEs are a hot button for questions.
Thanks, Kelly. Let's see here. Let's go back just a little bit here. Is the $16,000 limit the total a beneficiary can receive, or could they receive $16,000 from mom and $16,000 a year from grandma?
So it's $16,000 a year total.
Okay. Can we use ABLE accounts for house projects for the beneficiary's safety, such as building a backyard fence or room renovation?
So the answer to that question to me, and again, as the ALR, you need to make that decision, but if it's for safety reasons, maintains their health or safety, then yes, if you have a person who elopes and you need a fence to keep them from running off, that is protecting a person's health and safety. So I would just keep a copy of that, receipt for the $5,000 fence that you put in, and you write on there, used to protect, account beneficiary. But if you want to make a note, used to protect the account beneficiary safety. Something like that.
My daughter is taking classes toward a master's degree. Can she withdraw from her ABLE account?
If she qualifies for an ABLE account, absolutely. She has an ABLE account, you better believe it. Education, it can be for anything, non-credit all the way to master's degree.
Okay, do you have to revalidate a person's disability after you initially get that approval from a physician?
No, you don't have to revalidate it every year, but you are going to sign a self-attestation, or the person is when they enroll in the ABLE account, saying that if at any time they are no longer considered to have a disability, that they would notify Maryland ABLE and that they would close the account because they would no longer be eligible. But that would be at the responsibility of the account holder to do that. We don't ask our account holders to validate every year that they still have a disability.
Okay. What happens if the account holder passes? Does the money go to both parents? Is there a way to ensure the money goes to the parent that contributed if the other parent is not around and doesn't have legal custody? Like, can you do a will for a minor, gifting the money back to the contributor?
Okay, so that's a really great question, and it's two parts to that. The first thing is, let me just say, when the account beneficiary or owner passes away, this money will become part of his or her estate. Okay, so the first thing is, if the account owner is receiving Medicaid, one of the questions is, does Medicaid try to seek repayment from the ABLE account? I will tell you that here in Maryland, Maryland is one of the states that has a letter of a commitment from Maryland Medicaid indicating that they will not seek repayment of Medicaid funds. However, I want to let you know that when you receive waiver services or Medicaid, that is coming from two funding streams. Some of it is federal money and some of it is state money. So the state of Maryland has says we will not recoup or seek to recoup payment for the money we paid out. However, the federal government has never said that. They maintain the right to do that. Have they ever done it? To my knowledge, no. Could they do it? Yes. So that would be one thing. The second thing is the money is going to go into the person's estate. And then it's going to be subject to either probate, or if they have, a will in place, you can have a will, but that money will be liquidated and distributed according to either probate or how it is defined in the will. But that is where having that legal counsel is really important. And just because a person has a disability doesn't mean that they don't need a will or there shouldn't be a plan. There needs to be a plan. So once the money is going to be, the account is closed and given to the estate for distribution, it can go to a parent or to two parents or however, but we're not going to be able to delineate, oh, this parent contributed $7,000 and this parent contributed, $11,000, distributed that way. We have no say over that. It will become part of the person's estate, and that would, have to be worked out that way. Also realize that while, let's just say it's a parent that's receiving the money from the estate, from the closed ABLE account. Now it is going to be liquidated and it will be a non-qualified disability expense. Unless you as a parent have an ABLE account of your own, you could transfer the funds into your own ABLE account. But because these are intended for people with disabilities only, you may have the money that's liquidated, but you will pay taxes on the earnings when it is withdrawn, whatever you receive as an inheritance, okay? All right, I know that's a lengthy question, but a lot of people want to know about that.
No, appreciate that, thank you. Let's do one more. My ex-husband opened the account. He lives in California, and our son and I live in Maryland. Can I claim a tax credit if I contribute to the ABLE account? We both have power of attorney, and our son is 22. Or should I serve as the ALR? We parents do have an amicable relationship.
You are able to take an income deduction on your Maryland taxes, whether you're the ALR or not. As a matter of fact, if I made a contribution to the ABLE account, I could take an income deduction on my Maryland state taxes for the contribution to your child's ABLE account. It doesn't matter if you're ALR or not. Anyone living in Maryland that pays Maryland taxes, makes a contribution to an ABLE account, eligible for that income deduction.
Okay. Great, thank you.
All right, so I know we gotta be cooking with gas now to get through here, but let's see. With an ABLE account, remember that they are online. They're intended to be online financial accounts. So you're not going to drive down the road and see the Bank of ABLE. There is no brick and mortar building. They're online accounts that you're going to link to an existing bank account of your choice. That is how you're going to make contributions to the ABLE account, and it is how you will take withdrawals. And those withdrawals will go back to your linked bank account so you can spend it on those qualified disability expenses. We do offer paper checks can be written, or you can make paper deposits, but this happens very rarely because they're intended for online account management. So there's a small fee. I think it's $2.50 if you want to have them write you a check for a withdrawal. The other option is the prepaid card, which is going to bring us into some of our features. So for folks that are using the ABLE account, mostly just for a savings and investment option, they don't access the funds that often, maybe once, twice a year. You know, the best thing is just go ahead and log in, take your withdrawal for your qualified disability expense. But for those folks that have the ABLE account and they utilize their funds throughout the month, something you might want to consider is the ABLE prepaid card. It is not a line of credit. It's a card that you're going to load funds from the ABLE account onto the card. People do this usually like once every couple months, and then the account holder and the ALR, if they want to issue two cards, can have these cards and make purchases online or in the community, and it just automatically comes out of those ABLE funds. So there's a huge convenience factor there. It also provides some cool things like easy record keeping. It'll tell you, you know, all of your purchases by category. You can upload receipts there if you want. This is not something that comes automatically with your ABLE account. It's something you opt into. There is a fee of $1.25 per month. It's not a transaction fee, but the monthly fee, whether you use the card or not, is $1.25. So just something to consider. In the interest of time, I'm not going to get into it a lot, but I do want to say that the gifting page does come with the ABLE account. If you have an ABLE account, please consider using that tool. It's fantastic. You can create a gifting page for the account holder to help them get support in their savings or investment goals, support them in their goals of whatever they're working towards, a car, you know, taking a class at a college or whatever. You know, you create the gifting page, you launch it, and you send it to family and friends who would be interested in supporting that person in their goals and in their dreams and in their savings. They get the link. You can send it by text, email, and I believe messenger. So it's super easy. They get it, you know, okay, oh, here's a link to Kelly's, Kelly's gonna send Jeff a link to her gifting page because I am saving for my first apartment. And he could get it on his phone. He could say, oh yeah, I want to help her, you know, get some furniture for that place. I'm gonna give her $50 and hit send, boom, it goes right to my ABLE account. It's so easy. We have, out of our over 4,500 ABLE account holders, we have 455 people using this feature, and together, collectively, over the last 4 years, have received over $2.5 million in gifts. So people use it. So please consider doing that. All right, we've talked about the Maryland tax incentive. It'll be on your slides. Just real quickly, we want to cover the fees. Again, that is $35 for the year. It's an annual maintenance fee. It is withdrawn from your ABLE account automatically, quarterly at $8.75. Unless, of course, you just opened your ABLE account last month. You're not going to pay $35 for the year because you didn't have the ABLE account January through May. And then there are some asset-based fees if you choose the investment options. For those of you who are interested in enrolling, you want to go directly to the website where you'll find our program disclosure book. There's frequently asked questions. All the forms that I talked about are available there. And when you're ready to open the account, you're going to click on that little button that says open an account now. We recommend that you have a couple of things there and ready at your disposal. You want the social security number for the account holder. If there's going to be an ALR, that person's social security number. And if you're opening it for a minor, you don't have to worry about any consent documentation. It's, like I said, probably from beginning to end, 15 minutes. If you are serving as ALR for an adult, you're going to want to upload a copy of either your power of attorney over property, your guardianship papers, or that power of attorney over the ABLE account only. The other thing, don't forget, Get that bank account information. You choose which bank account you want to link to your ABLE account. Savings, checking account, doesn't matter. It can be from a national bank, a regional bank, a savings and loan. It's just whatever bank is most convenient for you to put that money into the ABLE account and to take those withdrawals. If you need any support when you're in the enrollment process or when you're managing the account and you're like, oh man, what did she say about that gifting page? How do I get to that? Let me call customer support. They'll walk you through the process of setting that gifting page up, or they'll help you with your online enrollment. You'll see the number there. They're available Monday through Friday from 9 a.m. until 8 p.m. So they're there to help you. They can actually see the screen that you're looking at and walk you through it. These are a recap of those important numbers we talked about, but in the interest of time, I'm not going to go over them again. You will have the slide deck for your review. And finally, I just want to say, stay connected with us, guys. Please consider going to our website, signing up for our newsletter. I'm going to promise you this, I will not blow your email up. I send out 4 a year, but I will tell you it has all the important information about any changes to the program. Consider following us on Facebook, because I try to use it as a resource page, linking information about estate planning workshops like the ones that Elville offers, stuff from Social Security, Medicaid, tax information. So consider following us there. If you have questions, you can reach out to us at questions@maryland-able. It would be my pleasure to help you and answer any of your questions. So that is the material that I have to cover today, and I'm sticking around for however long Jeff will have me to answer some more questions.
Well, thank you, Kelly. We do have a few more questions here to run through. Want to thank Kelly for a great presentation as always, and I will vouch for everyone here at the firm and say that Kelly is a remarkable resource for our clients here at Elville & Associates. Anytime we need something from her, she is there for our clients and will answer any question, no matter how big or small, and we appreciate her for that very much. So thank you again, Kelly. So let's get a few more questions answered here. So first question is, can an individual have an ABLE account and a 529 account at the same time?
Yes.
Okay. How about if all the questions were that easy, Kelly?
All right.
Good answer. What happens if the person with an ABLE account no longer qualifies for SSI because they have a job?
They can still have an ABLE account.
Mm-hmm. Okay.
As long as they have a qualifying disability. They do not need to be receiving SSI or SSDI.
Okay. I believe you touched on this, but I'll read it. What is the account limit for contributions each year, total limits?
16,000 that anybody can contribute to the maximum of 16,000, and able to work contribution limits max out at 12,880, but it depends upon that person's gross income for the year. So if you gross income is 10,000, you can contribute an additional 10 with able to work contributions.
Okay. I'm not sure if this would be up your alley. Is the limit of $2,000 in the bank for SSI also the limit for SSDI?
SSDI does not have an asset limit per se, so you don't have to worry about that. Lucky ducky.
Okay. Let's see here. Jumped around with some questions here. I just want to make sure I cover all of them. Give me 1 second here. Okay. Okay, here's one. Do all transfers of 529 plans to an ABLE account need to be completed by December 31st, 2025? FYI, I was provided this information by my attorney.
Well, you have a good attorney then, because they are correct. Right now, we do have a sundown clause of December 31st, 2025. So folks that want to take advantage of those ABLE 529 rollovers to ABLE, you want to do that now. We are requesting that they extend that time period. We're working on that, but right now we're currently limited to 2025, which doesn't seem that far away now.
It does not. Okay, and also, can an ABLE account be used for high school tuition? I'm going to assume yes. I'll defer to you.
Yep, absolutely.
Okay. How about for a small child, can you buy toys with their ABLE account, or would that be outside the scope?
Well, if those toys are helping them in their development, you would just have to be able to support that. You know, again, if the person gets audited and they say, what is this Fisher Price toy? And you say, well, it helps them in, you know, whatever, developing their skills. And the IRS agent says no, and you say yes, and they say no. The ultimate thing is if the IRS says no, then you're going to have to pay taxes on the earnings for the cost of that toy. So let's just say it cost $25. Whatever your $25 earned, you will pay taxes on those earnings.
Okay. And it looks like we have a couple more here. Let me see if I can read this question. What about using the rep payee account that Social Security pays into his monthly disability payment for his ABLE account? Can the sibling contribute funds and claim?
So it sounds like two questions. The first question is, can you put money can you link the rep payee account to an ABLE account? If you choose to do that, you can do that. That's a personal choice. Sometimes some parents hear that and it sends shivers down their spine. They don't want to do it, but we know that you can, and it really is up to you if that's
Okay.
most convenient.
I think this would probably be helpful to provide some clarification. Can anyone open an account, or do they need an attorney since they need the POA? Can you comment on that, please?
Yes, so anyone can open the ABLE account because again, you know, and it may be part of your grand plan for planning for the future of your child to work with an attorney, to have a medical directive, power of attorney over medical, power of attorney over property, all that kind of stuff. But for right now, maybe you're not there yet. You haven't started that process yet. If you have an adult child over the age of 18, you want to open an ABLE account, you go to our website under forms, and you're going to download that power of attorney over ABLE account only. And you just have to have that notarized.
Okay. My daughter has Medicaid and SSDI. Does she have the $2,000 limit?
She doesn't have the $2,000 limit with the SSDI, but, and I'm not a Medicaid or Social Security benefit specialist, but I think there is some parameters about Medicaid and waiver services that have some stipulations about things, but I really can't comment on that. But SSDI does not have an asset limit to worry about.
Okay. Does the account that links to the ABLE account have to be in my name or the child's name?
It could be in either
Okay.
the ALR or the child's name.
If the beneficiary moves to another state, what happens to the Maryland ABLE account? Is it transferable to another state's ABLE program?
Oh, excellent question. Yes, it is you can roll it over to another state, provided they have a program in that state. Again, there's 48 of them across the country. You could do one of two things. You could leave it with Maryland if you wanted to, because again, it's linked. It's an online account linked to your bank account that's going to follow you wherever you go, right? So you could leave it, or you could choose to roll those funds over to that state's program.
Okay. And last question for now. My daughter has SSDI because her dad passed and she is disabled. She has Medicaid as well. Does she have a $2,000 limit on savings?
Not with the SSDI.
Okay. Okay. All right. lots of great questions. This presentation always yields those, so thank you for the questions. Now would be your time to get those final questions in for Kelly, as I provide a couple of final brief comments. What I'll do, I always try to provide a pretty substantive email follow-up to everybody that attended. I will send out the video for today's webinar for you to review, or send out to family and friends that may be interested. I'll get that out by tomorrow morning. I'll send the slides out again as well. As far as any interest in attending our other webinars as part of our Elville webinar series, next Wednesday, we have a very popular presentation we offer every couple months, what families need to know about planning for a loved one with special needs. That's with our managing principal, Stephen Elville. Always does a great job with that presentation. And again, something we try to offer every couple months, as it is requested so often. Then we're going to take a little break. We have some vacations coming up. Steve's also studying for the Florida bar, so that's taking up a lot of his time, along with meeting with clients. So we're going to go to Tuesday, July 19th for our next webinar, which is part of our wellness series, a very popular series we offer here. We're going to be talking about social wellness on Tuesday, July 19th. That's one you don't want to miss. Wednesday, July 20th, Medicaid long-term care asset protection planning with our senior elder law attorney, Lindsay Moss. And also on the 22nd, Friday the 22nd of July, we have trustee selection and how to choose the right one for you. That again is also a quarterly webinar we offer, trustee selection being one of the most important things to consider when establishing a trust in the estate planning process. And that's going to be with, again, Steve Elville. You can register for these webinars in our events calendar on our website, and we'll have invitations coming out within the next couple weeks for all of them. So let's see if we have any final questions before we sign off for the day. Okay, so regarding the moving to the other state question, the person that asked the question got briefly disconnected. Could you answer that question again, please?
Yes, you can transfer or roll over your ABLE account from Maryland to another state's program when you move there if you want, or you could keep your ABLE account with Maryland because you have your ABLE account linked to your bank account, so it follows you wherever you go, whatever works best for you and your family, because sometimes states offer income, like tax advantages in their own state that are different, so you want to check that out.
Okay, very good. And the same person that asked the question, let's see, let me move back here just a second. She asked the question about linking the ABLE account having to be in her name or her child's name. She asked the question, since it doesn't affect SSI benefits, is it still something that you have to declare during the yearly audit?
That would be, I guess, your choice to declare that, but I mean, Social Security knows about everybody's ABLE account. We have to send a report to the Social Security Administration monthly that has the account holder and their account balance. So it's not like they're not going to know anyway.
Okay. Okay. All right. I think that covers everything. Kelly, again, thank you very much for your time. I know you're very busy, and a great presentation full of great information as always. Thanks to our attendees for lots of great questions, and your thoughts and participation is very helpful to the presentation as always. And we look forward to seeing you on another presentation soon, and hope you enjoy the start of your summer. Thanks for being part of the Elville webinar series. We'll see you again soon.
Thank you, guys.